Hello guys, welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about the term purchase and sales. Now before discussing on the topic on purchase and sales, we require to understand that when we purchase machinery, we use the term machinery account. When we purchase furniture, we use the term furniture account. When we are purchasing land and building, we use land and building account. But in case of purchase of goods, we use the term purchase account, and in case we are selling goods, we use the term sales account. Now we require to understand why we use purchase account and sales account. Now when a company purchases goods, it can be basically termed as a raw material. Now when a company purchases goods, which I term it as a raw material, which requires to be converted into a finished goods via a WIP, which we say as a work in progress. So a company basically purchasing goods means to say a company is purchasing raw materials, because you cannot sell this raw material. You require to convert this particular raw material into a finished good, and thereafter you can sell this particular finished good in the market and can realize cash. And from cash you can again purchase raw materials. So purchase goods, and why we use the term purchase account is basically the goods are basically termed to be part of raw materials which require to be converted into a finished good and required to be sold to the final consumers. Therefore, purchase goods we will use a term in accounts purchase account, and sold goods we will use a term which is known as sales account. In today's video, we will be discussing purchase and sales from three different points. Firstly, purchase goods via cash or via check. Second, you have purchased goods on credit, and there are information if there is sudden return with reference to certain purchases. Secondly, relating to sale of goods, we are going to discuss on you have sold goods and you have realized cash or check from your vendor. Secondly, you have sold goods on credit. And thirdly, there has been an amount of sales return in your organization. So this will be broadly the two areas, one from purchase, other from sales, and we are going to discuss with reference to certain examples. Now, example 1 states that purchase goods worth rupees 35,000 in cash. So since you have purchased goods, which we term it as a raw material, so we use the term purchase account, and secondly we identify it to be a cash account. Now purchase account, since you are purchasing goods, it's an expense, the part of nominal account will be debited. On the other side, cash being a part of real account, you are paying cash, so cash going out from your pocket, it has to be credited. So purchase account required to be debited and cash account required to be credited. Let's move on to the next example. Now in this example, example 2, purchase goods worth rupees 35,000 on credit from XYZ company. So you have purchased goods, raw materials from a particular vendor, XYZ company, and the entire amount of rupees 35,000 stands due, which that is the reason why it's being mentioned credit. So one is purchase account, since you have purchased raw material, and the second most important point here will be the personal account, which is XYZ company. Now purchase account being a nominal account and an expense will be debited. Now from the point of view of XYZ company is a personal account, is a giver, and therefore has to be credited. From the other point of view, since you have purchased goods from XYZ company, you require to pay back to XYZ company. So XYZ company is a creditor in your book, so required to be credited. So purchase account to be debited, whereas XYZ company account required to be credited. Let's move on to the next example. Sold goods worth rupees 35,000 in cash. So we have sold finished goods basically worth rupees 35,000 in cash. So one is cash account, and sold goods, as we said, will be sales account. Since you are receiving cash, cash being a real account, you are receiving cash coming in will be debited. Secondly, since you have sold goods, it's a revenue because you are earning certain amount of money. So any kind of income or revenue required to be credited. So cash account required to be debited, sales account required to be credited. Let's move on to the next example. Now here comes example 4, where you have sold goods worth rupees 35,000 on credit to XYZ company. So one we identify as sales account because you have sold finished goods, and secondly is the name of the personal party, which is XYZ company. Now here, XYZ company is a personal account and you are selling goods to XYZ. So being a personal account receiver, XYZ company account is debited. On the other side, since you have sold, it's a part of nominal account and it's revenue which you have earned. That is the reason why sales account is credited. So XYZ company account is debited and sales account is credited. Let's move on to the next example. Now we are going to discuss with reference to returns. Now example 5 states, return goods purchased worth rupees 35,000 to XYZ company. Now, if you remember previously we have purchased goods from XYZ company. Now why we are returning it back? We are returning it back because there might be two major reasons. One, the goods are not in according to the specification, or number two, it can be the wrong products which has been sent by the company, or the products are defective, and that is the reason why we prefer to return those products. Now since we are returning goods which we have purchased before worth rupees 3,500 to XYZ company, so we identify one account is XYZ company and the second account which we identify is a purchase return account. Now purchase return can also be termed as return outward because you have purchased those goods, now you are returning it back. So it can be termed as a return outward. This is another name to purchase return account. So XYZ company, since you are sending it back to XYZ company, being a personal account, is a receiver, will be debited. Similarly, if you remember, when we passed purchase account was debited because it was an expense. Now, since you are returning it back, so it's a decrease in expenses. And if you remember, as per the rule of debit and credit, we said increase of expenses will be debit, whereas decrease of expenses will be credit. So purchase return account will be credit since your expenses is getting reduced because you are returning back the goods. Therefore, XYZ company account is debited and purchase return account is credited. Let's move on to the last example. Example 6 states, sold goods worth rupees 3,500 returned from XYZ company. Now here, as per this example, you already have sold certain goods, finished goods, to XYZ company. Now again, XYZ from the point of view of XYZ company, they might have found certain product to be defective or not as per the specification ordered by XYZ company. So that is the reason they are returning it back. So we have identified two accounts. One is XYZ company account, another is sales return account since your goods are being returned back. Now sales return can also be termed as return inward since you have sold the goods and the goods are returning back to you, so it can be termed as sales return or return inward. Now goods previously which you have sold, right now it's coming back, so it decreases your income or your revenue. Since it decreases your revenue, it has to be debited. If you remember the rules of debit and credit, we said debit to be increase of expenses or else decrease of income. And on the other side, if it is an increase of income, it will be a credit. So decrease of income will be debit. Now secondly, XYZ company being a personal account is a giver because the goods are coming from XYZ, the goods are being returned from XYZ company and therefore XYZ company account will be credited. Thus, sales return account or return inward account will be debited, whereas XYZ company account required to be credited. I hope you have understood the concept of purchase and sales and purchase return and sales return with reference to the content which we have discussed in today's video. Till then, thank you. Have a nice day.